Hello friends, in these days we have completed sum number 8, 9, 10, 11. Now today we are going for sum number 12. Okay. So it is given on page number 81, sum number 12. Dara and Meera are partners sharing profit and loss in the proportion of 3:2. Final accounts of their partnership form as follows. Now this is somewhat different sum, and this sum has been asked in exam, board exam once. That trading P&L and balance sheet are directly given in the question. Now what you need to do, you need to prepare these accounts again. That means revise trading, revise profit and loss appropriation, partners capital and balance sheet. So in this sum final accounts have been prepared, but they are prepared with some mistake. See here, trading and profit and loss account are together, but we have to prepare it differently. So the items of trading is shown in trading, P&L in P&L, and we will solve the sum. And also no capital account is given directly like 11th standard they have done. See 11th standard what we were doing in the balance sheet, we were doing the calculation of capital in the balance. So that is capital plus profit and minus drawing C they have done. Now that is also not proper. So what we have to do, we have to prepare the revised accounts of all this. Okay. Yes. Trading and profit and loss account is given to cost of goods sold. Now friends, what is this cost of goods sold? Cost of goods sold, it will come in part 2 of the accounts. But just now I will say, what is this cost of goods sold? Cost of goods sold is equals to opening stock plus purchases less returns. If any purchase returns are there, then they will be subtracted. Minus closing stock plus direct expenses, that are wages, factory expense, and what we get is the cost of goods sold. So it includes opening stock plus purchase less any returns, minus closing stock, and plus direct expenses that are related to wages, factory expense, etc. All the expense which are shown in trading account are included in cost of goods sold itself. Purchases is there, closing stock is there, purchase returns are there, opening stock is there. So nothing will be given personally. All things are at same time. So only sales is not given. See, sales is given on credit side. So cost of goods sold includes everything excluding sales of trading account. So in this sum, trading account will have cost of goods sold on debit side, sales on credit side, and if any adjustment is there which is affecting, will be shown either on debit or credit side, and directly we will find gross profit. Because in trading account, opening stock is there, purchase returns, closing stock, direct expense, all these things have come. Now what is remaining? Nothing. Cost of goods sold on debit side, credit side, sales. If any other adjustment is remaining, that we will solve, and directly we will get gross profit. Okay, so remember this thing. If you want, you can write these things, otherwise no problem. Cost of goods sold has this much items into it. Okay, if you need, you can write, otherwise we are continuing this. Office expense, showroom rent, packing expense, bad debts, advertisement expense, selling distribution expense, financial expense, sundry expense, salary, tax, insurance. And they have distributed the profit in P&L account itself. That is wrong. We need to distribute this profit in P&L appropriation account, not here. Sales, sundry income, bad debts recovered or returned. Then balance sheet. Dara, capital plus net profit minus drawings. Meera also same. Creditors, bills payable, non-current assets as fixed assets, building, plant machinery, furniture, investments, current assets, cash balance, bills receivable, debtors. Now do one thing, you cancel the profit. This net profit you strike out, and here also net profit you strike out because we need to find revised profit. Other all things will be required. Now adjustments. After preparation of annual accounts, it is found that 5% interest on capital is not calculated. Tick on Dara's capital, tick on Mira's capital. Number 1. 10% depreciation on building is to be provided. Tick on building. Number 2 in balance sheet itself. Prepaid salaries of 400. Tick to salary. Number 3. Interest on investments is not received. Tick on investments. Number 4 in the assets. Bad debt reserve was 1200 is maintained. Tick on debtors. Number 5 in the balance sheet, and also bad debts are given in P&L accounts. That also number 5. Credit purchase of 1600 is not recorded. Okay friends, now we are having an adjustment relating to trading account. So first tick on creditors. Number 6. But purchases personally are not given. What is the effect of credit purchase not recorded? Purchase plus creditor plus. But here purchases is included in cost of goods sold, so let it be different thing. Show this unrecorded purchase on the debit side itself, because you know, if we are showing any item on debit side, that is debit effect, or we are adding the thing on debit side, that is also a debit effect. So we will simply show unrecorded purchase on trading account debit side, and we will add to creditors. Now we are drawing all the accounts. Now see in the book they are telling prepare revised trading, P&L appropriation and balance sheet. They are not writing the name of partner's capital account. Now that is required, that is compulsory. In book also there are 2 or 3 illustrations which are not having this capital account. That is practically wrong. And in book also I have seen a sum where in P&L appropriation account there is no transaction, so they are not preparing. Now how you can decide from previously that you don't have to prepare this P&L appropriation? So friends, I would like to say that if personally profit is given, see in one of the sum, in 8 sum only, profit of trading account was given, so it is not prepared. That thing is proper. Or if in 10 sum, if we are saying directly net profit is given, so trading P&L both are not required. But if profits are not given, then you have to start from the beginning itself. Okay, now we are going. Okay. Trading account, sorry, not trading, revised. Revised trading account of partnership firm for year ended as on 31/3/17, it will require maximum 6 months. Debit credit. Draw it for 6 months. After that, revised P&L account of partnership firm for year ended as on 31/3/17, will require 12 lines. After that, partnership form for year ended as on 31/3/17, it will require I think 8 lines. Okay, 8 lines. Now next, partners. Here name device I have not written, I have write it. Revised P&L calculation. Okay, revised. If you are not writing profit loss, all the writing P&L, they will not. Here also, everything is revised. Revised partners capital account for 8 months. Date, particulars, Dhara, Mira. Date, particulars, Dhara, Mira. And lastly, revised balance sheet of partnership firm as on 31/3/17, let it be of 15 lines. Liabilities amount, assets amount. Okay, the things are ready. Let us start. So first of all, starting with the opening balance of capital that is given in the balance sheet itself. For Dhara 1,60,000, for Mira 1,20,000. So on 1/4/16, by balance brought down. For Dhara it is 1,60,000. For Mira it is 1,20,000. Okay. Next, now as we are starting the accounts from starting itself, so no other balance. Now we are going for debit side of this given account. Cost of goods sold means opening stock, purchase and expense. So we will show it on debit side of trading account. Cost of goods sold directly in the outer column, 4,64,000. Then we have not kept space also. Two lines on each account. Here 2 lines, here 2 lines, here also both sides. Now office expense. P&L account debit side to office expense, that is 80,000. Next, showroom rent. Again it is an expense. So here only to showroom rent 10,000. Next, packing expense, it is also an expense. So to packing expense, 12,000. Next, bad debts, we have a whole format. To bad debts, trial balance plus bad debts adjustment. Wherever required, draw full only. Okay, don't draw half format. Draw always full format. It is okay that if some things are not available, then don't write. Now bad debts is given 8,000 in trial balance. Okay, here these are accounts. No bad debt reserve here is given. So that's advertisement expense also here. To advertisement expense 14,000. Selling distribution expense also same. Selling distribution expense 20,000. Financial expense. Okay, I think more space is required. So instead of 12 lines, draw it for 15 lines. Okay, I know you don't have to draw first. So draw P&L account for 15 lines instead of this. Okay, 6,000 to sundry expense. 16,000. Then next to salary. Salary has an adjustment, so inside 8,000 keep one line. Tax insurance also here. Most of the things are here. Directly outside 2,000. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, I think these 15 lines are also not proper. Better to keep 20 lines. Okay, better to keep 20 lines. At the starting of the lecture, I thought it would 12 lines would be okay, but all the things are here only, so draw it for 20 lines. Okay, otherwise space is not required. Okay, now net profit, as I said, cancel it. Now credit side we have sales. So sales is not here. By sales, sold 84,000. Sundry income is on credit side here. Most of the things are arranged only. Okay, we are just writing, so nothing new. 7,000. And last, bad debts return. So friends, P&L account is complete. What we have done, first we have started with the opening balance. After that, all this both trading and P&L was given together. So what we have done, these two things are in trading account, so we have shown in trading account. Other things are as it is, and wherever these adjustments are there, we have kept the space. Otherwise, the thing is very easy. Now we are going for the balance sheet, the things that are given in balance sheet. Now on the liability side, friends, we have been given Dhara's capital we have written. Then Dhara's profit is not required because profit we will find it revised. Then we have drawings. Okay, drawings is shown on debit side. Both we have drawings. No date is given, so 1/4/16 to drawings account. For Dhara we have 48,000, and same we have for Nira also 24,000. Okay. Now we are having creditors. It is having an adjustment on liability side itself. These things, capital account, these things are shown in capital, but was shown by mistake in balance sheet, so we are showing them. But creditors are shown in balance sheet itself, so there only it will come, but it has an adjustment, so inside 32,000. Leave one line. Then bills payable also here. So in this sum, it will be very easy for you because 80% things are there itself only if they are not having an adjustment. 80%. Now we are going for asset side, building. So they all are on asset side itself, but some adjustments are required for them. Building in the inner column, we will write 2,40,000. It has an adjustment. space is little bit less. No problem, I will adjust to that. Then plant machinery. Directly in the outer column 20,000. Then furniture. In the outer column 20,000. Then investments in the inner column, it has an adjustments. Investments in the inner column 24,000. See, this sum is easy for us because most of the things are correctly shown. These all are on asset side and shown also on asset side. But some things are there. See, suppose these two things are shown in trading, so personally we have shown in trading. All other things in P&L, so in P&L. And this capital account was not drawn, so we have drawn. So some of the things have came here. Other all things are same only. Now cash balance. Keep one line here, then cash balance. 10,000. Then bank balance 25,000. Then bills receivable 5,000. Here only. Then debtors 56,000. It has an adjustment. Okay, so friends, what about the P&L account? These all things are in P&L account, excluding these two are shown in trading. After that, all these things are in balance sheet, excluding here capitals, opening balance and drawing should be in capital account only. Okay? Yes. Now, before starting the adjustment, I will adjust some line here because there is a shortage of line. So let me adjust this thing because we require more space here. So I am adjusting just the space, okay? Nothing else. In the starting I said it will 12 lines are okay, but 12 lines are not okay. We require 20 lines. Okay, so I will adjust the space here. And I will cut short that P&L appropriation because only one interest on capital is only shown there. P&L appropriation account of partnership firm for year ended as on 31/3/70. Now this will require 8 lines only. 8 lines were correct here, but here I required more space. And here I am not leaving the lines, okay? Because I have a shortage of space. Yes. Now we are seeing each and every adjustment. 5% interest on capital is not calculated. Capital is credit, so its interest will be also credit. So 31/3/70 by interest on capital. 5% is required. So 1,60,000, 5% is 8,000, I think. 1,60,000 into 5% is 8,000 and 1,20,000 into 5% is 6,000. Here it is credited, so here it would be debit to interest on capital, debit side of P&L appropriation. Dhara 8,000, Mira 6,000, outer column 14,000. Here I left 2 lines, friends, but due to shortage of space, I know here nothing will come of 2 lines, so I have utilized that 2 lines. Okay? Yes. So here credit, here debit. Then next 10% depreciation on building is to be provided. Okay, building is here and depreciation is 10%. So minus depreciation in bracket 10%, so it will be 24,000. So 2,40,000 minus 24,000 is 2,16,000 in the outer column. Okay, here Subtract from asset, and here it would be debit side of P&L account to depreciation on building 24,000. Next, prepaid salary. Prepaid and advance are always minus. Now debit side minus means credit. If one is credit, other is debit. So prepaid advance is minus, so minus prepaid salary 400. In the outer column it is 7,600. Debit minus means credit. If one is credit, other is debit. After debtors I have one line, and then I will write prepaid salary 400. After that, interest on investment is not received 800. Not received means it is receivable. So here plus, debit side plus means debit. If one is debit, other is credited here. This you should know. Plus interest receivable 800. So in the outer column 24,000. Now here by interest on investments bracket receivable 800. Bad debt reserve of 1200 is to be maintained. Minus BDR AEJ adjustment 1200. So 56,000 minus 1200 is 54,800, and again in the format. Now bad debt adjustment is not given. Only bad debt reserve adjustment, that is third amount, is given 1200. Now 8,000 plus 1200, in the outer column it is 9,200. Bad debts adjustments are not there. Moreover, bad debt reserve trial balance is also. Now last adjustment, credit purchase is unrecorded. So purchase plus, but no purchase is given, so directly to UN REC purchase means UN means REC means recorded. Unrecorded purchase 1600, purchase plus, but purchase is not there, so directly here debit side itself and creditors also plus UN REC purchase 1600. So in the outer column 33,600. All the adjustments are over. Again I will repeat each and every adjustments. 5% interest on capital. Capital is credit, so interest on capital is credited. If there it is credited, here it is debited. Depreciation on building. Subtract from building and then P&L debit. Salary is prepaid. Prepaid advance are minus. Now debit side minus means credit. If one is credit, another is debit on asset. Interest on investments is not received, so receivable. So investments plus. Now this is asset. Asset is debit. Debit plus means debit. One is credit. So P&L credit, because it is our income also. Then bad debt reserve is required. So debtors minus, and in the format. First thing we have, second thing we don't have, fourth thing we don't have, third thing we have. So both plus and directly outside. And last, credit purchase is unrecorded. Purchase plus, creditor plus, but purchase is not given, so directly, and here creditors are given. So the sum is over. Now only we have not written the profit, friends. Other all things are written, because profit we need to find it personally again. Now we are finding 7,84,000 is the total. Here also 7,84,000. Now subtract 464 and 1600. So it is 3,18,400. Now friends, we have prepared a revised trading account. So it will not be gross profit, it will be to revise the gross profit. Don't write gross profit, because all the accounts are revised. So revised gross profit 3,18,400. Here it is debited, so here it should be credited. By revised gross profit 3,18,400. Now 3,18,400 plus 7,000, 1,800 is 3,27,200. 3,27,200. Now subtract each. Minus 80,000, minus 10,000, minus 12,000, minus 9,200, minus 14,000, minus 20,000, minus 6,000, minus 16,000, minus 7,600, minus 2,000 and minus 24,000. So it is 1,26,400. And this is revised net profit. Now this is debited, so here it should be credit by revised net profit 1,26,000. Sorry, not 200, is 400. What I have done, taken this gross profit here, total, and subtract each thing. Okay? Yes, now here 1,26,400 on both sides minus 14,000. So it is 1,12,400. Now this is to be distributed in 3:2 as it is given in the book only. To revised divisible profit in the ratio of 3:2. To revised divisible profit in the ratio of 3:2 for Zara or Mira. Okay. Now 1,12,400 divided by 5. Why 5? 3 plus 2, 5. Multiply the first part 3. So 67,440 equals to 2 equals to 44,960. Again I would like to repeat. 1,12,400 divided by 5 multiply 3. So 67,440. This is 67,440. Equals to 2 equals to, so 44,960. This is debited, credited here. 31,317 by revised divisible profit 67,440 and 44,960. Now always credit side will be more in this account, capital. 1,60,000, 8,000, 67,440. 2,35,440. 2,35,440 minus 48,000. 1,87,440. 1,20,000, 6,000, 44,960. 1,70,000, 960. 1,70,960 minus 24,000. 1,46,960. Okay. This is to balance carried down credit balance. It is on debit side. Then here capital Zara Mira 1,87,440. 1,46,960. 1,87,440, 1,46,960, 33, 600 and 8,000. It is 3,76,000. Let us check. 2,16,000, 20,000, 20,000 again, 24,800, 10,000, 25,000, 5,000, 54,800 and 400. It is exactly 3,76,000. Okay friends, so that's all for today. Now this sum, till 12th sum, the sums are easy. Now from tomorrow onwards, that is 13, 14, 15, 16, 17 and 18. 19 sum we will not do because it is so much lengthy and that is not expected. But now 13, 14, 15, 16, 17, 18. These 6 sums are very important. These sums are also important, but these sums are little bit short. Now the sums are very lengthy from tomorrow. So it will require more and more time. So that's all for today.